It is time for my weekly review and plan for next week. Uh, First trade of the week was a losing trade. Got into my calls at 160, calls at 181, out at 154 once the pattern did fail. Just have to stay disciplined. There's really no other reason for getting out there. When a bullish pattern does fail, usually leads to a little bit more of a bearish move, and it did move just that. A nice rollover there throughout the week, and bears did win the week. So moving on, the next trade I did take on Monday was in some 160 puts upon the breakdown of this pattern in 141 out at 181. Because this was a counter trend trade, basically looking for something to roll over on a breakdown. I did monitor this on the 5-minute time frame, got in, got out, and just kind of waited. Now Monday did set up in somewhat of an H pattern, maybe even considered a descending triangle, however you want to look at it, which did have a measured move of $1 from 159. Ended up hitting the target just right, and you can see from my previous notes here, target 158 on a breakdown here. So that actually worked out perfectly. Next day, did get a gap up into a previous breakdown level. Got in some 160 puts at 174, and I did trail those out as well on the 5-minute basis at 197. So overall, two decent trades, one losing trade here in the first couple days of the week. Now, once I had a gap down below a significant level here on Wednesday, Wednesday led to a tremendous trading opportunity here. Got in some 160 puts at 228 and all the way down to 580 before I saw a significant amount of volume come in and what could potentially have been a bullish candle, possibly looking for a reversal. As it turns out, turned into a dead cat bounce, also formed a bear flag, which these patterns also have measured moves. This one happened to be about $4, 158 down to 154. A break of this line should lead to about a $4 move, which it did come close to it in one day. It just took a little bit more patience to hit it on the following day. So overall, price action was telling exactly what was going on throughout the week. It was just a matter of being able to read those cues and be in position to capture those moves. On Thursday here, went ahead and got in some 157.5 puts, got in at 250, out at 434. Another good trading day there. Bears did provide some excellent trading opportunities here, and even into Friday, there was still quite a bit of selling. Finally found some support around 150.5. Only time will tell what's actually going to happen with regards to that level. Mentioned to a couple of people privately on stock twits that when the Bears do win or when the Bulls do win, you can kind of almost plan on the opposite type of price action happening on a Friday. People just simply don't want to hold risk into the weekend. Sometimes it happens, sometimes it doesn't, but it's a good mentality to have. There's news coming out the weekend, North Korea. There's all kinds of stuff going on in the world right now. So sometimes there's just risk being taken off, and I think we're seeing that right now. Now going forward here, I've got a couple of lines on here, but real quick, I'm going to go over an H sell setup, which I mentioned a couple of times on stock twits. Basically just means price sold down, creating a leg, had a bit of a bounce into a kind of a hump, and price action comes down to test that same level. Leg down, hump, looks like a lowercase h. Shrink up the chart just a little bit here, you can see a little bit cleaner. These do have a measured move. It's also could have also been looked at as a bear flag, which has a measured move as well. So it depends on how you want to trade that, whether or not you like flags or H cell setups or whatever you want to call it. Just stick to what works and be consistent about it. Now going forward here, these levels here I'm watching on Friday, 152 to basically 150.5. It's about $1.50 range. Now any professional trader is going to be interested in this because it is a tight range, provides a good opportunity for risk reward. It may chop around in here a little bit, so if that is the case, I kind of want to wait and see if price action is going to leave this region before it makes any kind of moves. Because of the daily candle over here, I am going to look for a move above this 152 level, and I'm going to be looking for a long above 152 flat. And if price actually comes down and triggers below 150.5, I'm not too sure that I'm going to go ahead and jump in because 150 is a major psychological level, in addition to gap support, which could potentially hold right there. Now, someone was calling this gap having been filled this day. You can obviously see the gap was already down here. So I'm going to keep saying it. If you're paying someone who makes those kind of outrageous claims, they cannot read price. They don't even know what a gap is and should really rethink whether or not they can sell a service. Now, my plan for this, if it does break above 152, I do kind of expect it to at least test up here around 155, 154.75 to 80, roughly, just because that is the previous breakdown level here. So I'm going to go ahead and put my target right here, and we'll see what happens with that. Ultimately, I do want to see this hold as support. Aapl is still bullish overall in the very long-term trend of things. This candlestick pattern here that formed on the daily basis could potentially set up as what's referred to as an abandoned baby, which is simply a bullish reversal pattern. It is a red candle. There's a significant amount of volume, so it does confirm there are a larger amount of participants in the trade. So it's only going to take some time to determine what those traders are doing. If it moves above, could potentially see some technical traders taking a play, simply above 152 up to the next important level, which in my opinion, again, 154.75 to 155. Below 150 and a half, like I said, major psychological level here. Could potentially have a lot of buyers there. We'll just have to wait and see. This is going to be the only plan that I do put on here because I don't want to be too bearish this far down. But if it does break here on strength, I have no problem go ahead and taking a potential trade below 150 all the way down here to the 200-day simple moving average. That is a very far drop. It's not impossible, but it is unlikely. So this will be my plan going forward. We'll see what happens, and good luck.